Think what?
Good morning, good morning, good morning. It is Thursday, the 16th of October. This is the Morning Blast with myself and Michael Brown. As usual, you know the score by now. This is all recorded live, so apologise if we say shit, fuck, or bugger. Mistakes do happen. We hope to give you a bit of value for your trading day with a rundown of what happened yesterday, a preview of what's happening today. And yeah, before we do, I'll get the legals out of the way. Nothing discussed on this Spaces session, or podcast rather. I keep saying Spaces. Podcast is trading or investment advice or infers any kind of endorsement by PIQ. Myself, Ryan Pays, you indeed, Mr. Michael Brown. Hello, my friend.
Well, very good morning to you, Ryan. Good morning, everyone. Happy Thursday.
Well, what a grim day it is.
Well, do you know what? I mean, you wouldn't know because you've been away, obviously, but it's just been grey for weeks now.
Oh yeah, no, in that case, I apologise.
I tell you what was depressing this morning is it didn't get light until about 20 to 8.
Well, have the clocks changed yet?
No, next weekend.
Oh, so then it gets even worse. Okay, yeah, great.
Yeah,
Oh,
exactly.
brilliant.
We all become nocturnal for 6 months, I think.
Oh, so it's all getting a bit rather depressing. Year-end flows, etc., are going to be mentioned more and more as well.
Oh,
Drink.
don't.
But enough of that. Gold, new high, all-time highs again. Frothy as a fine pint of ale.
I really wondered where that was going for a
So
moment.
did I for a second.
I'm very glad you ended up with ale.
Yeah,
to be honest with you.
I'm shocked that I did, but yeah. Anyway,
do you know what? Actually, I might as well pick up on that because obviously, gold and silver just absolutely relentless at this point. I was talking about this with some people earlier on, and it just feels like both of those are being driven by this just insane and relentless and physical demand. And when you've got supply shortages in the mix as well, I mean, you can throw as many fucking technical indicators on that gold chart or that silver chart as you like.
It doesn't matter.
I would argue that they're not really worth the paper that they're written on at
No,
this point.
exactly
Momentum is only going in one direction.
And this is the thing, right? We can sit here and go, oh, you know what? This is like very, very frothy, etc., etc. Beware. These kind of things when we happen, as we mentioned yesterday, when we have like these actual shortages in one region and stuff like that we do see very severe blow off tops. And with one hand, you're kind of hesitant to kind of say, it is more likely than not going to keep on going from here for some time, but you don't know if that's going to be 2 days or 3 days or 2 weeks. And also, you have no idea how high it's going to go.
Well, this is it.
But the thing is, as we know, that when this top does blow, as you said yesterday, look out below. But it's all very, it's a difficult one to, you feel like, there's probably a lot of upside here. Well, there probably is some upside left to go. But God, you need some serious balls to be buying here.
Yeah, absolutely. And certainly, silver, I know we keep talking about this, but it's a market that's basically being driven by a supply squeeze. So essentially, shorts have got to cover and they've got to cover whatever the price is. That price could be 50, it could be 55, it could be 60, it could be 75. Who knows? But one thing I think we can say with a modicum of certainty, at least, is that as and when these supply shortages do get resolved, which they will at some point, we don't know when, then the move lower is going to be pretty bloody quick, you would expect. But, and also, again, trying to time that is an absolute mugshot.
Yeah, exactly that. And also we see it, we've seen it in that gas. We've even seen it with some equities. I remember kind of, you're probably too young to remember, but do you remember the Porsche blow off top? When where it was like options driven, where it's kind of the Volkswagen and Porsche spin off and that kind of stuff. Then it's quite an interesting time when Porsche really went insane and had a proper blow off top because of basically a supply shortage in the actual shares, or because of the options market that was going on in that as well. And it's kind of it's reminiscent of those kind of times where the options play do start kicking in as well, where the options have got to cover. So these positions have then got to buy futures, which obviously then equates to physical gold. So it's kind of a powder keg, and I think it could it's going to explode at some point, but God knows how long the fuse is.
Yeah, and if you are trading it, then you're a lot braver than you or I think.
Yeah,
but there we are.
For those that don't remember the Porsche situation, it's definitely one to have a look at because it was insane market for a few days or a week or so when it went on. Definitely one to give a Google to and have a look at that.
Yeah, absolutely. And also, Porsche we will get on to the Morning Blast in a moment.
Yeah, sorry.
But I think Porsche have the best ticker in the world, isn't it? P911GY.
I'll take your word for it.
It's just great. Anyway, as to regularly scheduled programming in terms of markets yesterday, it was a risk-on day, ultimately, although that didn't stop markets having a little bit of a wobble as trade progressed. Nevertheless, the S&P closed up by about 0.4%, and the Nasdaq advanced by about 0.7% on the day. Markets elsewhere not really doing much at all. Treasuries a little bit softer, led by the front end of the curve, although the 10-year really doesn't seem to want to dip below 4% on a yield basis just yet. The dollar and most of G10FX just meandering about. The only real notable story in the FX land was the US announcing that they bought Argentinian pesos in the open market yesterday. Basically, Scott Bessent trying to prop up Javier Milei's administration. And as you said, gold continuing to print record highs. As for catalysts, there are a few bits and bobs worth mentioning this morning. We may as well start with the trade front. We heard from President Trump yesterday, who was speaking in the Oval Office and said, and I quote, "We are in a trade war with China now." Well, no shit, mate. You've been in a trade war with China since like January and arguably since the first Trump administration. So I'm not entirely sure why he felt the need to spell that out to everyone, but there we are. Not really much new from Trump himself, but we did hear from Treasury Secretary Bessent yesterday, who was also talking about China. He was saying that he is going to meet China's He Lifeng, who is sort of the number 2, I believe, in the CCP, before the Trump and Xi meeting at the end of this month. The implication there is that that meeting is still happening, by the way. I think that was probably lost on a few people. Of course, Trump was talking about pulling that meeting last week. Bessent was also saying that he's optimistic a deal can be reached and that the two sides are communicating. Again, kind of continuing to row back from this 100% tariff threat that we had on Friday. Bessent was also talking about other trading relationships. He was saying that the relationship between the US and Canada is back on track, that negotiations with South Korea are about to finish up. And he also said that the US administration won't negotiate on trade just because the stock market is going down. I assume that was a sort of Pinocchio moment where his nose started to grow after he'd made that remark. Bessent was also talking about the Fed. Obviously, the list of, the short list of names was 11. It's now 5. Bessent saying that the next round of interviews for Fed chair won't come until after the Asia trip, which is, of course, at the end of the month. After that round of interviews, he will narrow the list down to between 3 and 4 names. They will then have a round of interviews with President Trump, and then we will get the name of who is going to succeed Jay Powell next May. This is very much in keeping with the CNBC reporting that we had last week, which indicated that this whole saga might not actually be resolved until after Thanksgiving, which is considerably later than we were all hoping and expecting this would be. Moving away from that, of course, earnings season continued yesterday. Banks continuing to report in solid fashion, with both Morgan Stanley and Bank of America delivering top and bottom line beats compared to consensus expectations. Bank of America up by about 3.5%, Morgan Stanley up by about 3%. In terms of other corporate news, plenty of bits and bobs on the sort of techie/AI front. A company called Nscale, who God knows who they are, they've contracted 200,000 GPUs in partnership with Microsoft. These are NVIDIA GPUs for what it's worth. Moving on from that, sticking with NVIDIA, them and BlackRock, they have formed a joint venture to take over the Aligned Data Centers venture from Macquarie. That's a deal valued at $40 billion, which to NVIDIA is like a fiver to you or I would imagine. Sticking with the AI space, Anthropic, who are, of course, behind Claude, who I had a bit of a falling out with, they have overhauled something called Haiku, which is apparently their smallest AI model. This is as companies increasingly opt for AI systems that are nearly as capable as the most advanced tools, but come as a fraction of the cost. I imagine this is like sort of an Aldi version of AI as opposed to the sort of full fat Waitrose version that they
middle aisle AI.
Do you know, I went into a Lidl recently. And,
well done. Well done, you.
It wasn't a particularly pleasant experience. I won't be returning. But anyway, there was a queue halfway around the bloody shop. I just wanted to buy a couple of bottles of wine. I couldn't get to it. Anyway. What's like Apple, their woes on the AI front continuing. They hired someone called Qi Yang recently, basically to build out AI search and their own sort of version of ChatGPT. Well, they're leaving already. They're off to Meta. This is according to Bloomberg, citing sources. Other bits and bobs from yesterday, just going back to the precious metals trade that we mentioned earlier on. The Royal Mint issued a warning yesterday talking about delivery delays. This is basically a continuation of this supply shortage, supply squeeze that we were mentioning earlier on in terms of silver. The crux of the matter is there just is not enough silver in London at the moment to back everything that needs to be backed. And when the Royal Mint are talking about that, then that is obviously a significant issue. And Mr. Rich Bernard, I did not buy any wine in Lidl. I walked out very, very quickly. Don't worry about that one. Moving on from my alcoholism, other headlines from yesterday. We did hear on the government shutdown, which of course continues. That's now into day 16. A US judge was saying she's likely to block the Trump administration from carrying out mass layoffs during this shutdown. Of course, we had news last week from Russ Vought, the OMB director, who was talking about tens of thousands of layoffs. It looks like those are potentially not going to happen, or at least if they do happen, they're going to be caught up in the courts for some considerable time. From the Eurozone yesterday, we had the latest industrial production data. Production fell by 1.2% on a month-on-month basis in August, which not great, but it's better than the 1.6% decline that had been expected. And I will finish up for the time being with three stories from here in the UK, because over the last 24 hours or so, the sort of pre-budget rumour mill appears to have gone rather berserk. It's gone into overdrive, frankly. We heard yesterday from Sky News, citing sources, that Rachel Reeves is planning to boost tax incentives for entrepreneurs. This is apparently, I quote here, as she scrambles to pitch the government as pro-enterprise. Well, I think stable door meet horse in that instance, particularly when we had further reporting from The Guardian literally 6 hours after that, saying that Rachel Reeves confirms higher taxes on the wealthy will, quote, be a part of the story at the upcoming budget. I would say two things to that. One is that Chancellor Reeves' definition of wealthy is probably very different to what you or I would consider to be wealthy. Also, instead of part of the story, it's going to be the whole bloody story, to be completely frank. And also, according to the FT, also part of the budget, Rachel Reeves looking to launch an initiative with 20 of the UK's largest pension funds in an attempt to make it, quote, more seamless for them to back British infrastructure and growth projects. Again, stop mandating people to do things.
How many times have we said that?
The easiest way is to organically improve capital markets in the UK rather than forcing people to do things. But in any case, all of this comes against a backdrop of, frankly, no economic growth. The economy grew, according to the GDP data we had this morning, by 0.1% on a month-on-month basis in August. That's compared to the 0.1% contraction that we saw in July. Basically, the economy having done absolutely nothing in Q2. And for the time being, that is all from me.
Thank you very much, Mr. Michael Brown. But you're exactly right. Make the economy attractive, make the UK attractive to invest in. Don't force people to invest in it, because that never ends well. But moving on from that, because we could talk all day about the UK and Rachel Reeves, and we regularly do, especially over a beer. But let's read out some of the selected headlines and what's going on news-wise via the Overnight News Roundup, courtesy of our dear friend Zach. Do follow Zach, do follow Substack, etc. Moving on, starting off in macro space, Trump's Supreme Court tariff spectacle. US President Trump said he might go to the Supreme Court to personally watch oral arguments, on whether the bulk of the tariffs
grow up.
pass legal muster in what would be a highly unusual spectacle. The US took steps to block one of Hong Kong's largest phone companies from accessing domestic telecom networks, citing national security concerns, intensifying fallout from the Lee family from US-China tensions. Also, a Treasury official corrected earlier statements saying the 2-week government shutdown may cost the economy up to $15 billion per week in lost output, not per day as initially stated. So not only is the economy still not only is the US still ticking over, it's not costing them anywhere as near as much as they thought it would. So,
Well, I'm pretty sure that was actually Besant just fluffing his lines in an interview, because I think the sort of rule of thumb with a shutdown has always been 0.1% of GDP a week, which is about 15 billion.
There you go.
And Besant said on CNBC that it was per day, and I think they were just trying to tidy up his language, but I'm not 100% sure, because I was out and about with a client at the time. So,
down a pub.
Yes.
There you go. Right. Fed sees biggest repo borrowing since COVID. US Yes, so be prepared for the repo tourists to be around. If in doubt, follow our dear friend Conks. He is the man that knows, and as he says, there's nothing really to worry about. So if he says it, I'm happy to believe him. But anyway, U.S. banks borrowed $6.5 billion from the Federal Reserve standing repo facility on Wednesday. That's the biggest daily borrowing since COVID-19 pandemic, excluding end of quarter periods. That's as repurchase rates rose, suggesting tightness in meeting funding obligations with a net treasury settlement due this week. Also, billionaire Ken Griffin said generative AI isn't helping hedge funds produce market-beating returns and isn't meaningfully impacting the industry so far. Bank of Japan, hawks push for higher rates. The BOJ should lift interest rates closer to neutral levels given mounting inflationary pressures, as according to hawkish board member Tamura, adding there's a strong possibility the overseas growth slowdown won't be significant as initially thought. However, the IMF said the BOJ must keep policy loose and move very gradually in raising rates as global trade uncertainty clouds outlook, also warning Japan should avoid taking on more debt. Sticking with Japan, Japan's weakened LDP is set to begin policy talks on Thursday today with Japan Innovation Party as Takashi Wu's allies for next week's expected ministerial vote. Moving to China, China's household flees stocks for cash. China's households ramped up cash holdings last month, signaling they've begun shying away from local stocks just as the market is challenged by renewed trade tensions. Escalating US-China tensions are spurring yuan traders to prepare for greater volatility lasting into early 2026, with dollar offshore yuan option contract volumes on Tuesday, the largest in 4 weeks. China's also expressed willingness to strengthen high-level exchanges with France in strategic dialogue. Also, one to note on this is anyone that has been living under a stone, this whole saga with the UK and China and the spying stories and embassies and access to data centers and stuff, that is starting to really hot up, and it appears that Starmer and his government are in deep, deep shit. Moving on, Australia unemployment spike revises rate cut hopes. Australia's unemployment rates spiked unexpectedly to a 4-year high in September as more people went looking for work. Investors ramped up bets for an RBA November rate cut to 72% from just 40% before the data. So a big old move there in the market. However, RBA Governor Bullock said a pickup in consumer spending and higher inflation reading gave policymakers pause to consider whether further cuts were needed, with recent home building costs and market services suggesting core inflation may have been higher than expected in Q3. Speaking of the UK economy shows tepid growth. Tepid's being polite. The UK economy resumed modest growth in August, with GDP rising 0.1% after falling 0.1% in July, as Michael was saying earlier. Factory output grew at a faster than expected 0.7%, while services were flat for a second month and construction shrank. Construction is a real yucky sector for the UK at the moment. Chancellor Reeves will launch the Sterling 20 initiative next week with 20 of the UK's largest pension funds to encourage easier British investment, as myself and Michael just said. Make it more attractive to invest. Don't force them to invest. This is replicating China's Maple 8 model. So great. So nothing like a system that didn't work in the first place. The Institute for Fiscal Studies
does increasingly feel like we're just scraping the barrel at this
point.
point.
We are copying like schemes from other countries that haven't really worked, because it's not like Canada are doing great at the moment either. Anyway, the Institute for Fiscal Studies said Reeves needs to fill a $22 billion black hole at next month's budget. We keep talking about Reeves' big black hole.
That is a very optimistic estimate, I would argue.
I believe it is too. Yeah, absolutely. What else we've got? Energy chiefs warn of coming oil shortage. The head of Saudi Aramco warned of a global oil shortage on the horizon after a decade in which energy industry turned its back on oil, turned its back on the search for new oil, should I say. Amin Nassar called for a return to spending on exploration and production as global demand continues to grow, saying current investment was extremely low. That's according to the FT. Geopolitical news, Trump escalates against Russia and Venezuela. Trump said Indian PM Modi has pledged to stop buying Russian oil. That's why we saw a bid up in regular crude yesterday. And Trump will next try to get China to do the same. Good luck with that. As Washington intensifies efforts to cut off Moscow's energy revenues. Trump also said he's considering launching strikes on Venezuelan soil and has authorized CIA covert operations in the country. This obviously has escalated a military campaign in the region against Maduro himself and the cartels, etc.
Also, they're not very fucking covert now, are they?
Well, I was thinking that because you've got to think if you're the CIA, they're probably we all kind of assume that they're deep in the jungle. I'm assuming anyway. But why the fuck say it out loud?
This is bizarre, isn't it?
Yeah. But yeah, I think, from the build up we're seeing, I'm no expert in any of this. I'm not claiming to be. I'm not like one of these tourists on Twitter that claim to be an expert in everything. But from the build up we're seeing in that region and the South Caribbean Sea, etc., I think it seems pretty certain that we're going to see more action in that region. But anyway.
Yeah. Can I just say now, not investment advice, don't fucking sell stocks on Venezuela being invaded or a missile or something. Like, don't do it.
I honestly thought you were going to say front run the attacks on cartels by buying all your cocaine early. But I was like ahead of Michael Brown's The Christmas Party. But anyway, equity names. TSMC. TSMC crushes forecasts on AI demand. TSMC posted forecasts beating Q3 profits while guiding profit margins and revenue comfortably above analyst forecasts for Q4. The company gave sanguine AI market commentary, noting it continues to see robust demand with capacity very tight, saying conviction in the AI megatrend is strengthening. TSMC also said that even if China market is not available, AI growth will still be very strong. The company announced it's working with Amcor on a Arizona facility expansion, boosting shares in overnight trade. Whilst we've got big tech races to exit China's supply chains, Microsoft, Amazon Web Services and Google are accelerating efforts to reduce supply reliance on China amid rising US-China tensions. Microsoft is aiming for full relocation of assembly and key components by 2026. AWS, they're moving AI data center server production outside of China and evaluating alternatives to long-time China suppliers like SYE. And Google have doubled its server production capacity in Thailand. NVIDIA expands its Australian AI empire. NVIDIA is partnering with Australian startup Firmus Technologies to create a massive fleet of renewable energy-powered AI data centers across the country. Construction is already underway on 2 data centers in Melbourne and Tasmania for Project Stargate, a 4.5 billion Aussie dollar undertaking utilizing 150 megawatts of power. Facilities will use NVIDIA's GB300 chips and are expected to be online by April. Finally, from me, chip war heats up. Samsung Electronics delivered early samples of its 2-nanometer application processor to Qualcomm in a high-stakes bid to reclaim lost ground in its semiconductor arms race. South Korea's semiconductor industry anticipates OpenAI's large-scale HBM supply requirements will accelerate production expansion at Samsung and SK Hynix. Meanwhile, Japan's AI trade is back with SoftBank Group hitting a fresh record Thursday, while Tokyo Electron rises for a second day. And that's it for me. Back to you in the studio. Oh, actually, one to mention maybe, because I'm sure you'll get a pun for this. Nestle reported better expected sales growth thanks to price-led upticks in confectionery and coffee, though it said it will still act 16,000 jobs amid cost-cutting efforts. Easy for me to say. I need to put my teeth in this morning.
Yeah, you do. They're up 8% this morning, which is pretty sweet for the shareholders, but leave a bad taste in the mouth for the employees.
Well, you got to say, one good thing for stock price is selling more, spending less on employees. So yeah, it's a perfect mix for a good bounce or good bit of froth in your coffee.
Indeed. Right, moving on to today then. Frankly, there is not a lot going on.
And that's the end of the show.
Yeah, I feel like I say that every morning. Of course, we were due to be getting the September US retail sales and PPI prints today, as well as the weekly jobless claims figures, but none of that will be happening as a result of the ongoing government shutdown. As a result, we just have one notable release on the data docket today. That does come at 1:30 in the form of the October manufacturing survey from the Philadelphia Fed. That index is expected at 10. That would be down from a prior 23.2. Of course, that is used to shape expectations for the ISM manufacturing PMI that we'll be getting in a fortnight or so's time, but it's tough to imagine it being a market mover on its own. Besides that, we do have plenty of central bank speakers. We're due to hear from the Fed's Miran, Kashkari, Bowman, Barr, and Waller, as well as the ECB President Christine Lagarde and Chief Economist Philip Lane, plus external MPC members at the BOE, Megan Green and Catherine Mann, who will be speaking throughout the day today. And lastly, just in terms of corporate earnings, obviously, as Ryan mentioned, we heard from TSMC earlier this morning. Before the market open, we're due to hear from BNY Mellon, and then after the market closed, due to hear from Interactive Brokers. And of course, amid all of that, continuing to focus on incoming trade and tariff headlines as well. But for the time being, that is all from me this morning.
And it's all from me as well. Whatever you're doing today, have a great one. Keep it tight. Stay out of trouble. And we'll see you all tomorrow for the last show of the week. Woohoo! See you later.
So bye for now.
What are you laughing at?
Just you being so happy.
God, it's the week's over.
I
anyway,
wish.
right.
Bye.
Pub. See ya. Bye.